I'm excited to be here today again. We have a very interesting topic today, and I have a very cool personality next to me who has experience in the Web3 world, but also in the traditional world. So maybe you introduce yourself first a little bit so we get some insights of your cool vita.
Cool visa, nicely said. Thank you very much, Konstantin. And yeah, great to be here. As you can see, I'm a little bit older. That normally means that you have some experience, and which you can bank. So maybe to start with, I never wanted to work in the finance industry because I think it's fundamentally screwed. And I had a professor who was constantly talking and ranting about trading stocks and stuff like this. And I was always like, wow, this is so lame. I don't want to have anything to do with that one. And I worked actually for a different company, and that got acquired by Deutsche Börse. And so I wanted to leave because the finance industry, at least to a certain extent. But then it was always, yeah, but Alex, you can do this, and you can do this, and you can do this, and you can do this. And so I stayed there, ultimately for 15 years. And I was part of the management team of the cash market for IPOs and market operations and market supervision and listing and issuer services and everything. So the full bandwidth for the spot market, the full bandwidth for the derivatives market, ultimately member operations for the clearing market, did some of the clearing member defaults, luckily not Lehman Brothers, but some other big ones. And then I had the pleasure to run tech. I'm not a tech guy, but somehow I ended up running tech for all external clients. Tech operations, rollout of all infrastructures, building tech, so understanding the tech side, understanding classical markets, and then switching to sales, onboarded exchanges onto premises of Deutsche Börse, onboarded banks, rolled out trading infrastructure, rolled out market infrastructure. And then, luckily, ultimately, I had my fill 2013 and wanted to build the first regulated market for trading of in-game items of computer games on blockchain basis. A bit too early, as you can imagine, 2013. Won a lot of prizes, everybody was super hyped, but that was just too early. I still remember a meeting that I had with, back in the time, the executive producer of FIFA. They just had screwed up their next FIFA round of the transfer market. And I suggested how they can fix that one. And they said, yeah, Alex, you're right, but just because we think you're right, we cannot change monetization in EA or in FIFA, because that was back in the time half of the P&L of EA. But anyway, so it was too early, failed, but quit the job at Deutsche Börse. Actually, technically worked at Starbucks the first month, and the second month in the kitchen of a friend, and the third month in a bicycle shop, so like you read it in books. Failed, and then joined Börse Stuttgart. And as you know, we rolled out Bison trading, the first regulated MTF, and my legal team back in the time wrote most of the parts of the crypto custody law. So it wasn't too unsuccessful, I would say. And then I had the pleasure to join BitMEX, moved my family in the pandemic to Hong Kong, which was quite a ride, as you can imagine, because there's no try and test. You pack your suitcases, go onto the plane, arrive in Hong Kong. Back in the time, not a lot of people were moving to Hong Kong, so actually that was pretty well known, which is awkward. You run around the city with 7.5 million people, and the people stop and, you moved to Hong Kong, right? You're the guys from Germany, moved to Hong Kong. That was quite nice. I think we had some successes. The end was not as nice as I would have loved to have it. Ultimately, I won my cases, so that's good. But the fundamental thing that took me through all the journey is creating markets. Somehow that got me hooked. And what I wanted to build at Börse Stuttgart is actually not what actually we built in Börse Stuttgart. I wanted to build a bridge infrastructure between the classical world and the new developing tokenized world. Because classical players have huge problems because of the governance, legacy infrastructure, and yada, 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 to get into and connected to the tokenized world. And the tokenized world very often, although very innovative and pushy and all the stuff, somehow they lack the understanding which is necessary to build the bridge, so to say. And so I thought, you need to do this, either you come from a classical world or you do it from the tokenized world. So I tried it with Stuttgart. We had a lot of successes, but not the ultimate success to build it. Then I tried it from BitMEX, and you might remember that I wanted to acquire Von der Heydt Bank in February 22, which is was a German full bank. So we wanted to create a Silvergate of Europe in Germany, which I had to let go too. And then 23, I wanted to build up a bank in Germany, a bridge bank, but 23 was a terrible year for financing. And part of that bank was always a stablecoin, because you need the normalized transaction means to do so. And 3 potential shareholders, back in the time were DWS Galaxy and Flow traders, and here we are.
You see, guys, I didn't promise anything wrong here. I think it's a very interesting Vita. But let's go into the topic we want to discuss today. So AllUnity is a Euro stablecoin. Can you give us a little bit some insights, what your vision is, what your mission is, and how you see the market for Euro stablecoin especially?
I think that's really simple. Because today we have, in the classical world, we have more or less, and you might come up with more, yeah, but you have central bank money, you have deposit money, you have commercial bank money, and you have e-money. And all the discussions that are going on a global basis is tokenizing these four types of currencies, if you want to say so. So CDBCs, deposit tokens, commercial bank tokens, or e-money tokens. Very simple. And so our ambition is to become the #1 Euro stablecoin, and our competition is not other stablecoins. Our competition is not Tether. Our competition is not, trading somewhere on some exchanges. Our competition is classic fiat payments. That's our competition. The trillions and trillions and trillions of daily fiat transactions globally on Euro basis, we want to tokenize part of that one. Yeah, so the mission is pretty simple. We want to optimize payments through a Euro stablecoin, and as Euro is the second largest reserve currency, I think there's quite a market to tap into.
I have a lot of discussions with different banks, and they are thinking of getting into that business area as well, to emission a stablecoin or a Euro stablecoin especially. But usually we have the discussion, where is the business case? How do I make really money? And is it really worth it right now with instant payments and so on and the digital euro coming? Is it really worth it for a bank getting into that business area? Can you elaborate that a little bit more and explain where you see how you make basically the money at the end game? What is the end game for you? How you can influence the market and make money out of it?
Okay, for the banks, there's a lot of aspects that you have to double check on that one. So when you talk about tokenization, and not only about stablecoins, but also, let's say, tokenizing stocks, tokenizing trading instruments, tokenizing anything else, the business case, by definition, on day one is negative. It cannot be positive because the substituting infrastructure is still there. So you build a second infrastructure which is optimized, but you're running two instead of one. Then normally, what do you get for all of you in this industry? If you go to a bank, you don't get the best traded product. You get some shitty product which is traded in some backyard so that they don't fail on something. Guess what? Is not delivering the money. Can't. And then you get one or two of the couple of thousand that they have. Cannot be positive. So by definition, the business case is always negative. The question for the bank is more, what do I miss if I don't participate? What do I miss if I don't offer that to my clients? Now, today we are in the world where probably real economy clients won't change their bank account to be able to trade stablecoins or interact with stablecoins, but this will change over time. Now, for banks also the question is, does an own stablecoin make sense? I mean, Henry, I think I saw you in the audience. Interesting to see how you see it, but I think a stablecoin from a banking's perspective doesn't make sense at all. Because, sorry to say, and I hope I'm not stepping on some toes, BNP will, over their dead body, use a SocGen stablecoin. It's not going to happen, right? In a theoretical positive world, all banks come together and issue one stablecoin. Makes sense, won't happen. So the stablecoin issued by a bank is confined to the clients of that bank. And that means if the clients of that bank have interaction with other clients of other banks, then you already need an OTC market for exchange of the stablecoins, which is really cumbersome. So you're killing the efficiency. Now, we have different discussions where banks say, okay, but we don't want to lose our clients to you when they use your stablecoin. So they think about coming up with an own coin, which is actually the transaction mechanism into the stablecoin world. Yeah, so they onboard on just making something up, yeah. So don't say that they do it, yeah. But I'd say BNP issues an own coin. The customer goes to the coin, and the coin then transacts with Henry or with us, yeah. And then that's the way into the world. That's what we see now. Today, revenues are generated by interest that you generate on the reserves. Pretty simple. But I think that's not the market that we want to tap into. The market is the payments market, and the payments market is huge, and it's based on transaction volumes. And so we will ultimately have various pricing points depending on the usage of the coin, if it is a margin currency, if it's for collateral management, it's for treasury management, it's for payments, whatever, and you have then pricing points adjusted to that.
Great, I think that helps a lot for explanation. What I wanted to ask you as well, and I mentioned it before, the competition, as you said, is not another stablecoin. It's like the current payment methods. With instant payment, where do you see the benefit for your stablecoin or overall stablecoins or e-money tokens to instant payment? Because with instant payment for a retailer or for an institution, they can just push the button and the money is at the other party.
100%. Now, the point is a little bit like, and we had this in the chat before, blockchain, the possibilities of blockchain, and yada yada yada. The benefits come from cross-border. Domestic markets are highly efficient, really super efficient, and that means also for trading. For a domestic German trading market, we don't need tokenization and we don't need blockchain. It's just not necessary. It's super fast, it's super cheap, it's not necessary, sorry to say. But when you come cross-border, even within the European Union, it's very cumbersome, it's very inefficient, and it's very costly. And when you cross the border out of the European Union, then even more so. And SEPA instance stops at the European border, first. Secondly, the stablecoin, as we see it right now, is, let's say, the pure stablecoin. But that's just the start of it. We will add data to that, decisions to that, identity to that. So more aspects can be added that cannot be added to SEPA Instant. So the flexibility of a stablecoin is much more than also any other tokenized form like CDBCs, deposit token, what have you. And so international trading with euro or international transactions of classical corporates or financial institutions going beyond Europe, that's where the big benefits lie. And once again, if you're doing business with the US, SEPA Instant doesn't help you anything. CDBCs, by the way, also don't help you if the other side is just using stablecoins.
So basically you say international, but why should I use then a euro stablecoin and not a US dollar stablecoin?
As a corporate, if you use US dollar, you have to hedge the US dollar rich. You have to hedge the currency, euro to US dollar. What's it called? The exchange rate. That was what I was missing. So, and you have to care for that. Now, right now, if you're a big international corporate and you're doing billions of transactions on a global basis, you have to at least have the leading fiat currencies in your balance or your treasury management system. And that means you have a lot of hassle with that now. You can imagine a system where you only interact with euro, with the euro stablecoin. And actually the issuers that are connected are swapping the so to say, untechnical speak, the euro side of it to the delivery currency in the market that you are doing business with. So you as a European, you don't have to care for any other currency anymore. You don't have to hedge it. You don't have to have positions on that one. You don't care what's happening in the US and whether the price goes up or down. You just don't care. You go into the system with euro and you make sure that at the end in Argentina, the right currency arrives. So you cannot directly jump from 0 to 100, and that means for us doing stablecoin issuance, euro's a starting point. We're coming from the European Union, but to offer service to international customers, you need to offer ultimately all other leading fiat currencies as native stablecoins issued in Europe.
Okay, got it. Very interesting. So let's shift a little bit the discussion and go into the go-to-market, because I think this is a very important topic. As we discussed it yesterday on our tokenization panel, you can tokenize a lot of things. If you cannot sell them or trade them, then it's really, if there is no usage or distribution, the business case won't fly. So can you give us some insights, what you do, what your targets are, how you want to go to market with AllUnity, and how you're approaching it?
So right now, The interesting piece is you could have already a bunch of classical corporates as customers doing billions of transactions and not showing up on Cointelegraph or CoinGecko, and everybody would say you are a fail. So on the one hand side, you need to be visible, available significantly in the crypto market. I also believe, maybe not everybody's following me on that one, but I also believe there's even a euro market in perps and options on a global basis, because back in the time at BitMEX, and that was mostly mirrored by also the other big exchanges, you have 20 to 30% European flow. So it means Europeans having euro, switching to US dollar, trading US dollar margin products and backwards. Yeah, and so there is a market. Maybe ultimately 10%, maybe 5%, but 5% is a lot, daily perp volume, so it's not too bad. So you have to be in the crypto market to show that you are live and kicking, you have the volume, and ultimately you have to come to the DeFi space to get into the liquidity pools, especially at the beginning. Now, for the, let's say, real economy adoption, you have to have the banks, because the corporates are not switching their banking relations just because they want to use the stablecoin. Also, the corporates normally, I mean, when we talk about the big ones like Telekom, Schwarzgruppe, that are very advanced in that, they don't have a problem with own wallets. But if you talk to an SME company, they don't have 5 people managing their wallets. They don't want to have anything to do. They are with some savings and loanings bank, and they want the bank to offer them the wallet. And the bank should decide the most efficient way. If it's fiat, they should use fiat. If it's stablecoin, they should use stablecoin. So you need to get to the banks. That's the first thing. Second thing is you need to get into the treasury management system, because the treasurer is probably the most conservative person in the world. But the good thing about the treasurer is, if you think about mass adoption and you think about the classical financial world, there's always a winner and a loser. Trading. Trading side wins, post-trade side loses. Banking side. What you can optimize, there's always a losing side. In the classical corporate treasury, everybody wins. There's no loser. Money's coming earlier, risk is lower. Yeah, I don't have to hedge any currency risks. There's no loser. No, there's nobody losing in that equation. And then the treasurer is also very simple. They will say to the CFO, okay, here's the benefit, very easily to calculate, and what's the cost to implement? That's very, very simple. So you need to get into the treasury management systems, you need to get into the banks, and then you get the payment flow.
I understand the Web3 part, and I think this is the easier, I would say, to get listings in exchanges, and then you can swap the AllUnity Euro token to Ethereum or Bitcoin or whatever. I think that's straightforward. But since banks are very interested, of course, in stablecoins, how do you usually convince banks to really take your coin or your stable coin as a currency and bring it in their systems? Because I imagine it's not cheap to bring in their systems, and they are losing power.
Yes and no. So firstly, it's not expensive because you need a bank account and a wallet. That's it. Minting and creation minting and redeeming doesn't cost anything. So again, that's not a big. You don't need a complex API. Wallet and a bank account is enough. The question is the bank really losing something? So the discussions that we have with banks are very simple. I would even go to as far as easy, because the bank is actually then fulfilling the same role that it fulfills with Euro. Yeah. So we are an infrastructure. So we're not competing with the banks. We don't offer accounts. We don't offer wallets. They should offer that. We just offer the stablecoin. So they can be a reserve bank just managing our funds. They can be a transaction bank, so helping in the daily operations, or they can be a so-called first buyer under MiCA. And that means they mint and redeem the coins, which they then can give to their clients so that their clients can use it like they use Euro. So in a sense, it's exactly the same role that they have with the Euro system. And for us, so we are on a very good track. Somehow the banks understood that there is a train rolling with stablecoins and better be part of it than standing on the sideline, because ultimately this will come. You discussed it now and before, that the European Union switched the stance to stablecoins gradually, carefully. But since the US with the Genius Act, but also China switch the narrative from CBDCs only to also stablecoins pretty fast, it is clear that the Eurozone has to follow suit. And that means international companies are very, very careful listening to, okay, yes, wholesale CBDCs might come, there might even be a retail CBDC, however ridiculous that is, but stablecoins will be the global transaction and payment mechanism. And for Germany, Germany doesn't have, so to say, not a big finance industry, so the change in finance is pushed by the real economy. If Aldi would say, we pay with stablecoins, imagine one bank saying, okay, then we don't bank you anymore, forget about it. So if you get the big real economy European companies, the finance industry will follow up.
Last question on that. When do you think can I go to Aldi and pay with AllUnity?
I don't know. The difficult thing is, and you might have seen the announcement, there was an early announcement from Amazon or Walmart, but there was another one, I think, this week or last week, that they want to go into stablecoins. Now, this can just be for optimizing the backend side of payments, or it can also be, let's say, to the front side of it. Interesting, I had a conversation with French Hill, who is the chairman of the financial committee of the House of Representatives of the US, and they're very carefully, let's say, viewing how big e-commerce companies are using stablecoins and whether they also want to use the stablecoins to the outside world instead of just optimizing the backend side. There can be 0-1 events. Just imagine Deutsche Telekom would say, from now on, we accept stablecoins, and we use stablecoins for global payments. All global telecommunication companies are connected. So if they accept stablecoins, if they accept the euro, all the other telecom companies would accept stablecoins. Automatically, they have to. No way around it. If they build it into their system and allow it for payments, then automatically all customers will be able to do it because they have the infrastructure, they can do it. So there can be 0-1 events, but otherwise I think we're now on the way of B2B adoption, so the X adoption, this will still take 1 or 2 years.
So 1 or 2 years. We go to Aldi and shop.
Maybe Aldi even longer, but let's say not in 26.
Great. Alex, thank you very much. It was a pleasure talking to you.
Thank you.
I hope the people all in the crowd got some good insights about stablecoins.
Thank you.